So our next speaker, James Newsome of Persefoni, is an example of a smaller company that's really doing some amazing things in that arena that we were just describing. So James, come on and tell us a little bit about it. You are the Chief Data Officer at Persefoni. It's so good to meet you in person.
Thank you. Nice to meet you. Nice to meet you in person also. All right. So I'm clicking, make sure that I'm working this. Point it towards back here? Try that. Yeah. Okay. I see the. All right, are we pointing towards?
Maybe you need to be shorter.
I know, right? I have to get down. I have to get down a little bit here. All right, see. There we go. There we go. All right. So I have a question. I know it's still morning, so we might not have had all of our coffee yet. But raise your hand if you agree with the following statement. We do not have time to fix this. We need action now because shit is literally on fire. Love it. Now, there are some ambitious goals that have been laid out that we've talked about. I'm gonna have to get my height distance right for this. And what is my target that I'm pointing at? So I can be a little bit more accurate here with the slides. The middle button. All right, there we go. Awesome. So there's some ambitious goals that we've talked about. You heard other speakers get up and talk about, and this crowd knows very well. Right now, we're essentially on fire. Where do we need to be by 2050? Zero. There's been a lot of statements around what does net zero actually mean? What does the commitment to me actually mean from a company standpoint of what I need to do? There's a lot of technology that we're going to need in order to solve this. But there's one thing that is consistent. Without being able to measure something, then how essentially do you even manage it? So we cannot get to where we need if we do not have proper accounting to account for it, and also where this is trusted and auditable. Today, I'm going to talk about the invisible cost of doing business. And to the point, my name is James Newsome, Chief Data Officer at Persefoni. And there's three takeaways that I want everyone to take away from this conversation today. One, we're going to talk about Persefoni's story. Two, why carbon accounting is difficult. How is it different than financial accounting? And why do we need it? And how Persefoni is streamlining climate disclosures, carbon accounting, and carbon management. So when I think back to the start of our company, I was talking to a couple others in the room, and when we say we started from a garage, we didn't literally start from a garage, but we did start from this house called Mission House. So the first place where we was writing code, developing, figuring out these ideals, it was actually, we named it Mission House because it was a street on mission. Our company was started by three individuals, Kentaro, Jason Offerman, and Kim Stroh. Now, the difference is they were executives at an energy company, and they were tasked with the problem of measuring the company's footprint. And when they was going about it, they saw how difficult it was. Like, you mean we have to go to consultants to do this and pay all of this money to do it, and we only do it once a year? If you have a revenue budget or an expense budget, will you wait once a year to measure it to say, where am I at? Like, how will you ever achieve any goal? Or if you're not able to operationalize that data, how do you know you're on track to hit that goal? And so starting from that need, they brought a team together to help build this. And I'll never forget, Kentaro hit me up on LinkedIn and was like, you know, I haven't talked to you in a while. How have you been? I met Kentaro while I was working at Insight. I was the director of data science and data engineering. And what I did while I was at Insight, the core of it was understanding accounting systems, understanding decision points, and making sure that the technology works to solve those problems. Not saying the technology needs to force what the decisions are, understanding the decisions that business leaders needed to make, and then working backwards from that point. And I also have my master's in accounting, and we'll get into that. And I never thought I'd use it once I got into the technology sector, actually. So he met me and he said, James, I'm starting this company, and we're trying to impact the world and measure the footprint of companies to help them reduce it. And I looked at him, I said, man, I definitely want to do this with you, but I'm not actually a climate scientist. And he looked me in the eyes, he said, this is initially a data problem that we need to be able to solve. And I said, well, sign me up. I'm all ready for it. So that is why we exist, to help companies manage, measure, and reduce their overall carbon footprint. Now, who are we? We are a global team, over 240, quite diverse from a teaming perspective, because we need to be able to solve this globally, not just here in the US, but we need to be able to solve it globally. And so we have teammates in London, we have teammates in Japan, we're looking to open up an additional office in Singapore. Now, there's a core difference for how do we think about this software, and that is what has driven us to be one of the fastest growing software companies or startups in history. So what are we trying to measure? So when we talk about this measurement issue that we have, when we heard Lucas talk about scope 1, 2, and 3, I will highlight those really quick. When you think about scope 1, this is the emissions of assets that you control and own. So you can dictate what happens with that asset. It's called scope 1, your direct emissions. Scope 2 is typically you're consuming from the utility grid. So it's the purchase of electricity, heat, steam, or cooling for an asset that you either own or you control. And we call it indirect because you don't really control how that electricity is essentially generated. Now, one of the ones that we talk about when we talk about the difficulty in measurement, and we'll come back to it, is scope 3, because that is indeed your shadow. Because when we think about scope 3, these are the emissions you influence by your buying decisions or your habits, et cetera, right? You may not actually generate those emissions, but your decisions, the companies you invest in, the way you interact with other businesses, then influence those overall emissions. All right. Now, from one of our theses, I have to duck a little here to be able to click. All right. All right. There we go. There we go. I know. There we go. Go back. All right. We're gonna get this right. No, it's perfectly fine. Let me go back. I think I have the aiming right now. There we go. Awesome. So when we think about those two books, Carbon Accounting versus Financial Accounting, what is essentially the difference? When we was first saying, like, how do we impact this? How do we affect change? I came across the GHG protocol, and we talk about some of the limitations in the GHG protocol, but what I saw within the GHG protocol, I instantly saw it as gap. I was like, this is very similar to the general accounting principles from a baseline for how do we need to scope what we're calculating, how we're calculating it. And why is that important given we need to take action now? If we're not able to agree upon the rules which we're calculating and measuring, how do we know, or how do we compare the results to say if we're actually doing what we're saying we're doing? How can we actually say if a company is really committing or executing against what they're executing to? So we need a way to scope it to say, this is how we've agreed upon accounting for this. Let's account for it. And then that way we can compare and create an audible record. So the goal for Persefoni was immediately we saw that what we're really creating is an accounting platform. We instantly saw that. And so given that we was creating an accounting platform, who's the audience initially? It needs to be auditable. It needs to be transparent. It needs to follow a particular set of rules, because what we saw that was needing to take place in the market is exactly what was said earlier. Every company will say, yeah, we have this problem, but we all need to do it. But if a company is not forced or mandated to report, most likely they're not going to invest the resources to make that change. And so we actually did target the CFO office. We did not initially target sustainability teams because they did not have the ability to make company-wide impacts and hold people accountable. But the CFO office did, because anything that needs to be reported and audited they're now on the hook for it. So you better know that they're going to care about the accuracy and the transparency of it. And from there, we saw frameworks such as TCFD, GRI, being very similar to FASB, meaning what do I now need to report given I have the data? And then once you have that data in a reputable source, now you can start to look to make changes from that. Now, what we saw last week was a major, major milestone for the company in our thesis. Because initially, remember when we talked about this is truly an accounting problem. How do we solve an accounting problem? This needs to be auditable. It needs to be able to scale. We need to be able to have companies force mandates where they actually report. So we have brought together a talented team from across the industry. One of our teammates is Tim Mohan, who was the CEO of GRI. We have Rob Eccles, who was founding body of SASB. And because of that, we knew that we had to be involved with the conversation. So when we talk about the rules from the SEC, they actually called us not once, not twice, but they called us 3 times to help influence the proposal and understand it from a carbon accounting, because we are the experts when it comes to how do we measure and build accounting systems around it. And because of that interaction and that communication, Christina Wyatt was actually an author on that proposal. She said, we finally have the software to impact change. She came and joined our team. And she's leading the disclosure effort to work with companies and enterprises to help them understand what these rules mean and how do they need to get in line in order to be able to execute against it. So now, why is this important and how do we do it? Go back. No, skip it again. Sorry. And I'll go through this part real quick here, is why is carbon accounting so difficult? One, it requires expert knowledge, complex data management, and it's also a potential liability issue if you don't get it right. So what we've done for our clients is we took this documentation that was once very complex, over 1,800 pages, and we built a system that hooked directly into ERP systems, other systems of record. We take that activity data, run it through our calculation engine so that we can produce an auditable and traceable record for clients within the carbon ledger, we call it. That way it can be audited, it can be digitized, and now it can be used to help change how companies look at their carbon accounting holistically. And we do this in a UX that abstracts all of that complexity from the client and make it easy for a client to use without being an expert in carbon accounting or needing consultants in order to do that work directly for them. And this has been validated by the market. Forrester reviewed our software and reviewed other softwares and indicated that Persefoni is truly the ERP for climate. We've partnered with Workiva, who manages over 70% of the SEC disclosures, so that we can integrate our data into the platform directly so clients can easily report their carbon emissions with these SEC disclosures that they're already reporting today. We partner with Bain & Company to help companies with their overall strategy, because we do believe every industry is different and need their strategy for them to win. Why do I show the customers here? Because we work with 18 out of the 20 industries, and we have really good visibility into what is needed in order for clients to reduce their overall carbon footprint, and how do we account for that. We see Persefoni been at the baseline of climate tech, and that is needed to scale, because again, without a core system of record to be able to measure and do the accounting, how possibly can you ever change? Thank you, and I appreciate the time to talk to you today. And if you have any questions, I'll be outside or be around later. Feel free to stop by and ask.
You know, it would be a good job to be your investment banker, because I think should Oracle or SAP or Salesforce buy this company? One of those is almost certainly. Anyway, well, thank you so much.
We're committed to scaling this.